Welcome to another video from 10x Investor Education. Today I would like to talk about closed-end fund known as BSTG symbol, BlackRock Science Technology Trust 2. Okay, so why I choose this fund? So I have part of investment portfolio. I have a dividend investment portfolio where I do not do a lot of transactions and I look for technology and non-technology closed-end funds that pays monthly dividends and volatility is low. So I just keep once buy and forget for months and I getting keep getting the dividends monthly. Okay, so let us look into this BSTG, why I like this fund and why it is not as volatile as a lot of other technology funds. Okay, so if you look at briefly the performance, so first of all, this fund cannot be bought. This is a closed-end fund. The one thing I don't like about closed-end fund is the expense ratio is high, but I still prefer sometimes closed-end fund for multiple reasons. Okay, so the 1 week, today it went up by 1.4% when actually Dow Jones went down. So 1 week is 4.5% return, and 1 month is close to 10% return, and 3 month is 21%, and 1 year is 84%. So if you have not bought any stock, individual stocks, if you would have invested in this fund around last June, you would have made close to 85%, 84% return. On top of it, you also make monthly dividend of 17 cents per stock. Okay, so right now this comes to be around 5%, but it used to be 5 to 6% when the stock price was low. So monthly dividend of 17 cents, and actually it used to be 10 cents, and the value net asset value has been increasing. So they increased the dividend to 11.5 cents few months back, and in March actually they increased it by 40%, close to 40%. They increased it by 17 cents. So a tech fund giving you a 17% return on top of 85% year is great to have without thinking anything. Okay, so you can compare this to ARK funds. ARK funds will have returns but a lot more volatility, no monthly dividends. Okay, so and if you look at here, the best way I buy these funds in IRA, multiple reasons, and also I buy at some, and then every 5% and 5% or 10% drop, I add more. So that is why you can increase actually return much better than actually 85%. So you can actually easily get 100 or 110% in a year if you have bought multiple times and average it out. Okay, so this is about this fund, and let us see what are the stocks that are part of this fund. Okay, so it highlights, so NAV is $42. Okay, so the premium discount is, you are actually getting a discount. It's not plus, so you are getting a discount on this one. Okay, so let's look into this. So they also have a BlackRock Science and Technology, just BST, and but Trust 1, but this is Trust 2. This is second closed equity fund, which is my favorite. So it's a limited closed term fund. It started actually recently 2019, and 80% of assets in equity securities issued by non-US and non-US sector. Okay, so this is important. So if you're looking for pure US ETF, this is not, and I liked it because it is in emerging growth companies such as Japan, Korea, a lot of Asian companies that are actually growing at a much faster rate in technology. Okay, so this is about this company ETF, closed-end fund, rather CEF. So you can look at, based on term, you can look at latest, up to May year, 1 year return, annual return up to May is like 76%. Market price, if you include the dividends and other things, is 86%. So March it is like 122%, and December is like Right. So overall 1 year, if you take it, is close to 90% return with including dividends. So what are the key facts about these assets? So this is traded in New York Stock Exchange. Okay. So it is not a small fund, and that's what I like. This is not like $100 million fund, $200 million fund. This is close to $3.4 billion worth of CEF. So this is one of the big closed equity funds. So that's why I'm not worried too much on this. Even if it goes 5% down at the market, it will still come back pretty soon. So the average market cap it invests in the companies is close to 42 million. So it used to give me close to 6.5%, but the stock went up recently. The growth market, as the market rotation happening in the growth stocks, this also went up a lot. So that's the reason why the distribution rate went down quite significantly to close to 5%. Okay, so ESG, no worries at all. Again, going back holdings, this is the most important point I want to dig into in a minute. But this is what this is into multiple sectors, mostly in tech sectors. Okay, so this invests large cap, 50% of it, and mid and small cap is close to another 40% in it. So the head of the fund is pretty smart guy, and he has been doing it for BlackRock for years, and also he was part of big companies before, and he's a MBA from Columbia. Okay, so let's get into the details, some of other details. So these funds, actually this is showing how they distribute the dividend, monthly 17 cents dividend for last 2 months. So most of it, 65% came as a short-term capital gains, and 36% is only long-term capital gains. So depending on your tax bracket, so it is the same thing even for April. So depending on the tax bracket, actually for April, everything is short-term capital. So they don't do written off capital because the assets are growing. So, they make ton of money. So that's how they're giving you 17 cents per month. So ideally, this is not a candidate for regular trading account, because short-term capital gains, you have to pay a lot of tax, depending on your tax rate. So this is the reason why it is in my IRA. So I don't pay for growth, or I don't pay for taxes until Roth IRA. I don't pay for this. I love this kind of fund in my IRA account. Okay, so so let's get into the little more technical details of the fund. Okay, so it's closed in CEF. Okay, so as I said, almost in March, their dividend went up from 11 cents to close to 17 cents, which is almost 50% rate. Okay, so because that is how much money they are printing. Okay, so the most important thing that you need to know in this CEF is 25% of its portfolio is in private investments, and also in different countries. Okay, so this is the one of the most interesting aspect of actually this fund. So if you look at their, actually go back, if you look at their one of their characteristics, or their goal. Okay, so access to private market, 25% is in private companies, next generation and emerging companies in technology. Okay, so this is not like some of the ARC stocks where they don't make any money for next 5 years or 4 years. Okay, I will show some of the companies, they make ton of money, and there are a lot of the companies are like a pre-IPO, where their valuations growing up like doubles almost in 2 years, and they make ton of millions of revenues every year. And also these funds, good thing I like any fund is sells right call options on underlying equity portfolio, potentially reducing the fund. This is my most favorite, because writing call options to generate extra income. So this will reduce actually volatility with this kind of characteristics. That's why I like it. So going back here, so 25% of portfolio in private investments. Okay, so if you look at here, so they reached the capacity of 25% by March itself. Around they have 28 private investments, comprising of 25% of our portfolio, which is 747 million. So out of 3.4 billion, 750 million is close to in private companies. So that is, you might be comfortable or not comfortable actually investing in private companies, but believe me, they are good private companies. So during the quarter, the trust participated in various follow-on funding rounds, which means these private companies, as they do rounds again, they decide can invest more funds. Okay, so they added more funds to companies known as Databricks, Tracks, Cinex, Data Robot, and you can go on Google, and these are well-known companies. Okay, so let us look into holdings of these companies. Okay, so where do they invest in these private companies? Okay, so if you look at here, this is private investments in BSTG, and there is also other funds and sectors. So these are the top 10 holdings. So Project Kafka, Project Debussy, Tesla, Kakao, Square, C3AI, Twilio, Fartech, Snap. Okay, so you might be wondering what the hell is Project Kafka, IT services, Debussy, okay, Kakao. So, and if you look at here again, Klarna, Flix Mobility, Innovium, so Samanova, semiconductors. So a lot of, almost all these are private companies, which is close to $800 million they invested in. Okay, for example, ByteDance, right? So the parent company of Tic-Tac-Toe, which is valued very very high. So if you look at some of these companies, okay, for example, Klarna. So they invested close to $100 million in Klarna. Okay, so if you look at Klarna, so Klarna is becomes Europe's most valuable startup now, worth 31 billion dollar. So they invested 2 years back, and they would have doubled their money in this company easily. So they are a fintech company, and they make a lot of money. And look at this, resulting in a $1.1 billion net operating income for Klarna. Okay, so this is not even revenue. This is how much money they are net operating margin, and that's the reason why it's most valuable startup in Europe at $31 billion valuation. So similarly, Kakao, actually it's a South Korean company in won. So if you look at here, few years back they had 740 billion South Korean won, and then it's close to 4,200, which is close to 6x in last 6 years. So it's been going up every year. And the third company is known as GitLab, which makes around $150 million revenue, which is valued at close to $2 billion valuation. And another company known as Samba Nova, which is new Palo Alto chip unicorn valuation, which is valued at $2.5 billion, and this has grown up in last 2-3 years. So this is again, all these companies, they have a lot of VC funding. For example, this company made $250 million, got new funds in Series C fund round. Okay, so this is what BSTG is, BlackRock Science Technology Trust. Okay, so they invest in 25% of money in private companies, and 70% in public companies, and they invest actually in US 50% of their money, and then and then the rest of that money is in China, Korea, Japan, mostly so Asia. Emerging markets, you can say, some European, but it's mostly emerging markets. So I like this exposure, and also I like the exposure to these private companies, which are not as volatile as per the everyday stock market ups and downs. That is the reason why this is a little more stable than a lot of index funds that are purely based on public stocks. Okay, so as I said, if you have not bought any stocks in last 1 year, if you would have invested in this, just in this BSTG, you would have made close to 84% just in stock appreciation, and close to 5 to 6% another monthly dividend. So close to 90% return in 1 year. So why am I taking this particular CEF at this point? Okay, so right now this CEF did not do great this year. Okay, this year return is just like ARC funds. This year return is not that much. So if you look at here, so January it was like here. So it was $35. Now it's only $42. So it really went up by like close to 20%. But with market rotation going on into growth, there is a high chance that this will grow up a lot like ARC funds, but with less volatility and 5% monthly dividend yield. So this is about BlackRock Science, which is a CEF that I invested in my IRA, which I just invest and forget about it, and it generates 17 cents per stock every month revenue, and it grows up. And I'm pretty happy with this one, especially during following dips. Just in last month I added a lot more, and we'll see how it goes this for the next couple of months. So, and this is purely entertainment purpose, and this is not stock advice, and this is what I do with this CEF. So do not treat this as my advice. Just do your own research before buying any stock or an ETF. Thank you, and please click the like button, and see you on my next video. Thank you.